What's going on? Welcome back to the channel. So today when I talk to you about Goldman Sachs, they just had their Q1 earnings. I'm going to go over the absolute key highlights from the earnings that you need to kind of take away from it all and just where I see things going from here. Before we get into any of that, make sure you guys hit that thumbs up, and with that, let's get right to it. So Goldman Sachs did settle roughly around that $503 range, up 1.93%. Earnings were very good, so they did have essentially a triple beat. So good earnings per share, good revenue, as well as good future guidance. So I'm going to go over the future guidance near the end of the video, but it was on more so the timid end. So leading into the earnings, you did have the implied move as 6.13%. Most likely, a lot of that was planned for more of a downside given the circumstances and everything else, but they came out and kicked ass, took names, and all the fun jazz. So always a good thing. And even leading into the earnings, you had the 1 week, 3-day, and 1 day leading into the earnings all green. One thing I like to analyze is shorts. What shorts did leading into an earnings, just to see if they had any strong consensus, and they didn't really in Goldman Sachs's case. They did increase slightly, but that could be just attributed to broader market concerns rather than having any strong opinion against their earnings. So far pre-market, they're returning 8,000 shares. 1.21% of the free float is being shorted. So GS is definitely not a squeeze play. It's just good to analyze this type of information. Based on the calls that was done, you are seeing a good consensus for it to be roughly around that 525 to 530, and then the bears are anticipating for it to be sub roughly around 490. 495. So a lot more upside is anticipated based on all that. With it closing at 503, it is trading between this S1 and this S2. So 497 will be a strong support, and that's actually what the low roughly was on yesterday for Monday. And then flip side, 523 is going to be the next strong target / resistance. So kind of just take note of these going forward. But as far as what analysts are saying, so you did have a couple ratings that did come out. So it looks as though you do have the highest rating as of today. So 720. You also had a 700 that was just posted this morning. Yesterday you had 560, 650, 585, 570. But as you can kind of tell, given where Goldman Sachs is sitting at, a lot of bullishness attributed to their earnings. As a consensus, $619 is that price target, representing a 22.86% upside. So definitely does go to show that it is being seen as a pretty good deal for the broader market. So let me know your general thoughts on that in the comments below. Side note, if you do want access to all the analyst ratings, forecasts for upcoming earnings, ownership, everything that you ever need, take a look at IBKR, link in the description below for all this information, like I said, to be completely free. But with that said, let's get into their future guidance and some of the key highlights from their earnings.
Goldman Sachs Q1 2025 highlights: $3.2 trillion in assets under supervision and $19 billion in alternative fundraising. Earnings call insights: Goldman Sachs GS Q1 2025 management view. CEO David Solomon highlighted strong financial performance in Q1 2025, with net revenues of $15.1 billion and earnings per share of 14.12. Return on equity was 16.9%, and return on tangible equity reached 18%. Solomon emphasized the firm's resilience and ability to deliver strong results in a dynamic market environment. Global banking and markets generated revenues of $10.7 billion, with robust activity in FICC and equities, despite market volatility. Solomon noted that the firm maintained its position as the #1 global M&A advisor, citing marquee transactions like Google's $32 billion acquisition of Wiz and the $24 billion take-private of Walgreens Boots Alliance. Asset and wealth management achieved record assets under supervision of $3.2 trillion, marking the 29th consecutive quarter of long-term fee-based net inflows. Wealth management revenue grew 11% year-over-year to $2.2 billion, supported by $1.6 trillion in client assets. CFO Dennis Coleman reported a $5.3 billion return to shareholders during the quarter, including $4.4 billion in share repurchases. The firm's CET1 ratio stood at 14.8%, and total operating expenses were $9.1 billion, with an efficiency ratio of 60.6%. Outlook: Management anticipates ongoing market volatility and uncertainty, with the macroeconomic backdrop showing signs of slowing growth. The firm's economists project U.S. GDP growth to decelerate from over 2% to 0.5%, raising recession risks. Solomon described elevated client dialogues and a fourth consecutive quarter of backlog growth in investment banking, but cautioned that execution will depend on market conditions. Asset and wealth management is expected to sustain high single-digit annual growth in durable revenue streams over time. The firm continues to focus on efficiency initiatives, including leveraging AI to optimize technology and enhance client service. Management reiterated confidence in the long-term benefits of AI adoption for productivity and operational efficiency. Financial results. Global banking and markets produced an ROE of over 20%, with advisory revenues at $792 million. Equity and debt underwriting revenues were $370 million and $752 million, respectively. FICC net revenues were $4.4 billion, with record financing revenues of $1 billion. Equities net revenues reached a record $4.2 billion, driven by strong performance in derivatives and financing activities. Asset and wealth management revenues were $3.7 billion, with management and other fees up 10% year over year to $2.7 billion. Private banking and lending revenues increased 6% to $725 million. The firm reported $19 billion in alternative fundraising during the quarter, contributing to a total of $342 billion raised since 2019. Gross third-party alternatives fundraising is expected to align with recent years, subject to market conditions. Q&A. Glenn Schorr, Evercore, asked about deleveraging impacts on financing. CFO Dennis Coleman explained that while some balances may decline due to asset price adjustments, client repositioning activity remains significant. 𝗖𝗢𝗡𝗡𝗘𝗖𝗧, Bank of America, questioned the April market shift and its implications for trading and financing. CEO Solomon acknowledged increased uncertainty, but emphasized continued high client activity and strategic repositioning. Betsy Graseck, Morgan Stanley, inquired about the impact of potential regulatory changes on the supplementary leverage ratio, SLR. Solomon highlighted potential benefits to Treasury markets and broader financial system efficiency. Stephen Chubak, Wolfe Research, discussed risks to the deal backlog. Solomon noted increased client dialogues and backlog growth, but acknowledged the dependency on economic and market conditions. Sentiment analysis. Analysts expressed cautious optimism about market activity and regulatory changes, but raised concerns about potential slowdowns in client activity and financing. Questions often reflected skepticism about sustainability in the current macroeconomic environment. Management maintained a confident tone, emphasizing the firm's strong positioning and adaptability. Solomon frequently highlighted resilience and long-term strategic benefits, while Coleman detailed operational efficiencies and financial discipline. Compared to the previous quarter, management's tone remained steady, with consistent emphasis on execution and client engagement, albeit with increased focus on economic uncertainties. Quarter-over-quarter comparison. Q1 2025 net revenues increased from Q4 2024, $15.1 billion versus $13.9 billion, alongside higher EPS, 14.12 versus 11.95, and stronger ROE, 16.9% for 14.6%. Investment banking backlog continued to grow, maintaining momentum from Q4 2024, though the macroeconomic outlook has become more cautious. Analysts' focus remained on capital deployment and regulatory impacts, mirroring themes from the previous quarter. Risks and concerns. Management highlighted the risk of a slowing global economy and potential recessionary pressures. Regulatory uncertainty and geopolitical tensions were also noted as factors influencing market conditions. Analysts raised concerns about the sustainability of financing revenues and the potential impact of market volatility on trading and investment banking activities. The firm's efficiency program and AI adoption were positioned as key strategies to mitigate cost pressures and enhance operational scalability. Final takeaway. Goldman Sachs delivered strong Q1 25 results, driven by record assets under supervision, robust performance in FIC and equities, and continued growth in wealth management. While management remains optimistic about the firm's long-term prospects, they acknowledge near-term economic challenges and market uncertainties. Strategic investments in AI and operational efficiencies are expected to support sustained growth and shareholder value.